Hey guys, good afternoon, everybody. Today is Tuesday, May 24th. It's about to be 1 p.m. Our scheduled time for our group mentoring session for today. So I'm going to go ahead and set this room up real quick. Once it's all set up, we'll get started with the mentoring session for this week. So let me just get everything all set up real quick, and then we will get started with the session shortly. Go. One last thing here, and looks like we're good to go. I'm going to send this link out to you guys here in the premium so that you guys can ask your questions. Good right there. So I'll give it a few minutes for people to make their way in. Hey, good afternoon, everybody. Hey, Craig, how's it going? I'll give it a few minutes for people to make their way in. It's 1:01 p.m. right now, so it's just a minute after 1. Our scheduled time to start. So I'll just give it some time for people to join. And once everyone's in, we can get started. But if you guys have any specific questions, feel free to put them in the chat, and I'll start adding questions to the list for today. So if you guys have any questions regarding any of the strategies, any of the concepts, I mean, anything trading related, really, trade psychology, anything that you guys need help with, just put the questions in the chat, and then we can start going over your questions in order. So if you guys remembered from this morning, towards the end of the live, I marked up where I thought price would go, and it pretty much played out exactly how we anticipated. So price over here pretty much consolidated for a bit. It pushed up, retraced a little bit around this area, and then it went all the way up. So this is basically when Powell started speaking. So prior to Powell speaking, price pushed up, it had some manipulation to the downside, and then it just went straight back up. Pretty much how we were kind of waiting for. It wasn't a smooth move as I drew here, but it did push up, where we anticipated. Now I do expect price to come back down. It's probably going to reject off the sessions over here and slowly make its way back down. But as we close out of New York session, market's gonna be closed for about an hour, 2 hours, and it's probably gonna consolidate a bit before it starts to make its move. So hey David, how's it going? Glad to hear, Craig. All right guys, so it is 1:03 right now. I think people are still joining. There's only about 13 people in here right now, so I'll give it some more time for people to make their way in. But yeah, if you guys have any questions, just put your questions in the chat. I don't have any questions lined up, so this session is basically going to go on for as long as you guys have questions. So I'm free to answer whatever questions you guys have. I'm available to stay on here for as long as we need to. But this session is just going to last for as long as we have questions. So first question over here from David. David's asking, can you look for entry base on strategy during the day? Sorry, David, I'm kind of confused with your question. So your question is, can you look for entry base? What do you mean by that, entry base on strategy during the day? Do you want me to look through like different entries that came up during the day, or I think that's what your question is, right? Or if there's something specific you want me to look for, we can look at that. Like if you have a specific strategy that you want me to like look for entries, we can do that. If you're just looking for like open-ended, just want me to look through like all the entries, then we can do that too. Just keep in mind that David said, like, looking at the chart, what you see. Sorry, I'm still kind of confused, David. Is there because the market's closed, it's closing right now. David, I can't really analyze anything because the market's going to close right now. Like, there's nothing for me to look at right now. Market closes in like 15 minutes or less. So these candles are going to stop moving. So I can't even analyze anything that's coming up soon because there just isn't anything to look at. We're at the end of the session, so this isn't exactly the best time to look for trades because typically you shouldn't enter trades towards the end of the session anyways. So is that what you wanted me to do? Did you want me to look at entries that are coming up soon? Or did you want me to look back to see if there was entries that came up during the session earlier? Because I can do that, but looking at entries right now, it's probably not gonna, like, we're probably not gonna find anything because the market volatility is dying down right now. I don't know if you're aware that the market's closing right now, but it is closing like in a few minutes. So there's nothing for me to really analyze here. I mean, I could analyze whatever is up on the chart right now, but there's not really anything to look at because when the market reopens, it's going to be a brand new day. So I'm not sure if you understand that concept where the day ends right now and then when it reopens, it's gonna be a brand new day. So a lot of the stuff from like previously is not really going to apply, moving forward because it's a brand new day for the charts. I'm not sure where you're located, David, but like the market shifts over. Okay, let's see your question. So you want me to look for trades after 10 a.m. my time? Is there a specific strategy, David? Because there's a lot of strategies that we can look at. I mean, it just depends on like, because your question is like super open-ended. There's like I can focus on like something that you like. Like if there's a strategy that you like, I can focus on that and I can look at entries, or I mean, if you really just want me to go over whatever entries that came up after 10, I can do that. But you're probably not going to find anything because there was news during that time period. Like from right here, this is when Powell started speaking. If you want me to look for trades after 10, this is not going to be a good time to look for entries because Powell is speaking for like an hour from like 9:20 up until probably 10 or 11, right? So there's not going to be really anything for you to look at from this period. This is a reason why we don't trade during news periods because Powell's probably speaking from like here up until this point. Another thing that I need to address is that we can't look at overall bias. So like, I can't check what the overall bias was during this time because I wasn't trading during this period. So like, if you knew what the overall bias was, and I'm pretty sure it wasn't a sell, if you can confirm it, then that could help. So here's the thing, guys. So here's a problem with like me analyzing stuff during this period. Here, this is basically what David wants me to do. He wants me to look for trades from like 10 and on. But this period, there was like heavy news. Powell was speaking, right? This is like one of the highest impact news that affects the market. Powell was speaking here at 9:20. And then he basically spoke for I don't know how long because I wasn't on the charts. So unless like you guys know how long he was talking or what the bias was, because I'm sure the bias wasn't bearish anymore. Price was already pushing up from here. So it could have shifted. It was probably mixed because the retail sentiment was, let's see, retail sentiment still short, but the fundamentals were bullish, as you can see right here. So there's no overall bias. If you're asking like, okay, look at trades from like this morning from like 6:30 until 8, then yeah, I would know what the bias was because we were trading during that period. So like if we were looking from trades from 6:30 over here until 8, if that makes sense, David, I don't know if you're like following along with like what I'm trying to explain, but like we knew what the bias was from 6:30 to 8. So if you want me to look for trades from 6:30 to 8, we could look for sells because we knew the bias was a sell. I don't really know what the bias was at 10 over here. I can look at trades, but I can't give you a reasoning as to like why a trade may have worked or had not worked. So I guess we can go over it, but if the trade doesn't play out, I can't give you an explanation as to like why it didn't play out. Most of the reason that I can think of is that it's probably because the bias wasn't confirmed. like an overall bias, but I mean, we can try. So we'll start from like 10 o'clock. That's the first question right here. So I'll go over the pivot scalp strategy, V1, V2, V3 for David here. Next question is from, here, I'm just going to add the questions to the list over here real quick. And then I'll try to go over it as much as possible. But for future reference, if you guys ever want me to go and review trades like during a certain period, make sure to like write down or note what the bias was so that we know which direction to trade. Because here's the thing, David, if you want me to cover like any of those strategies, like the V1, the first requirement here is to confirm overall bias, which we can't confirm because you're asking me to go back in time, basically like 3 hours. And we can't confirm what the bias was at that period. So just keep that in mind. This is the first requirement. So if this requirement isn't met, there's not going to be an entry available, right? So we'll try to go over it as much as possible, but in the future, just make sure that you confirm the overall bias. And then if you could provide that, we can kind of understand, you know, why some trades worked, why some trades didn't. But that's the problem with going back and looking and back testing, right? Because you can't really back test unless you know what the bias is at that time. So let's see. First question here is from David. So David's asking, cover pivot scalp V1, V2, and V3 entries after 10 a.m. Next question is from Steven. And I'm just writing down everyone's questions, guys. So if you guys have questions, put your questions down. I'll add them to the list here so that I can make sure I don't miss any of your questions along the way. Steven's asking, and I'll just answer your question real quick, Steven. Steven's asking, do we still take trades during mentoring session or we stopped doing that? So back to what I was saying earlier, Steven, the market's closing right now, so we can't take any trades, even if you wanted to. You can see the volatility, market's not even moving. So short answer to your question is no. We've actually never taken trades during the mentoring session. Even if you wanted to, you wouldn't be able to. Steven's asking, do we still take trades during mentoring session? But we've never taken trades during mentoring session. This is the sessions is meant for mentoring, Steven. It's not for active trading. So short answer to your question is no, we don't. And we're not going to stop doing it because we never started doing it. So no trades during mentoring session. Also right now it's 112 because the market's going to close here about, it depends on the broker. Typically the market closes right here at 2 o'clock. But I believe for FTMO, if you look on FTMO or MT4, the market's already stopped or it's about to stop. Typically, I think FTMO closes around 120. So in about 8 minutes right here, this is where it typically closes for FTMO. I don't know what time other brokers close, but it's around the same period. It's around like 120, 130, sometimes up until 4, depending on the broker. So I'm gonna skip over that question, Steven. So next question over here is from Mario. Hey Mario, how's it going? Mario said, hey Sean, how do you do when price goes against you? Do you let it touch stop loss or you close part of it? I typically just let it hit stop loss, Mario. And I'm coming back to your question, David. I'm just answering like the quick questions right now before we go into your analysis, because it's going to be a pretty deep analysis going through all the trades from 10 o'clock. So Mario's asking, hey Sean, like he's asking, what do I do when like price goes against me? If price goes against me, you have to understand, like you have to know when to eat the loss, right? Like you can't just keep moving your stop loss farther back, or you can't like close early, because if that becomes the case, and I'll show you an example right here. I know there's no entries over here. I know there's no entries right here, but typically, I'm trying to find one where, okay, like, so for this one right here, I know this isn't an entry, but I'm going to use this as an example. And I'm just going to close these things so that we don't have any confusion here, because I know there's no entry. I'm just using this as an example for why you would and why you wouldn't close a trade early. So say, for example, here, you're entering a trade for a sell, right? Just say there's some sort of sell entry here. Your stop loss is here at 770 pips. This isn't any strategy. I'm just showing you guys that these are situations that will happen. Basically, Mario's asking, you know, if trade goes against me, do I let it touch stop loss or do I close part of it? So like, for example, right here, if you got scared and you closed out right here, you would have just taken a loss, right? But if you would have held on to it, price would have came down and hit your TP. So you just have to trust the trade. You can't just like close early every time you get scared because price pulls up. Or you can't just move your stop loss higher. Like say, for example, here, this is a situation where you let the trade run and it hits your TP. Here's another situation, and I know this isn't an entry here, but here's another situation where if you had another sell entry here, and this happens to a lot of people, right? A lot of people, it'll get close to your stop loss, and then what happens? Like price gets close to your stop loss, and you get scared and you move your stop loss higher. And instead of just taking a loss, like right here, you end up going into a deeper hole, and then you lose even more, right? So this all has to do with discipline. You know, there's a reason why we teach strategies with specific requirements. Like all the strategies that we follow here all have specific requirements, right? Like the V3, specific TP stop loss. You're not supposed to go against these rules. If the trade goes against you, it goes against you. You know, you might have done something wrong, or the trade just went against you. There's nothing to fight it. If you take a loss, it's fine. Just eat the loss, move on to the next one, make the loss back on the next trade. So short answer to your question, Mario, is yes. I typically let it hit stop loss. I eat the loss and I move on to the next one. I never move stop loss wider unless volatility. There's gonna be situations, like there's gonna be some situations where say you're taking like let me see, like a buy right here, right? And say this is a scalp. So say this is a scalp and you're taking a buy for like 300 pips or something like that. And say the volatility is super high. Like this is like moving, like each candle is moving like 500 pips, right? Your stop loss might be too tight. So what you might do is you might move your stop loss a little wider and have your TP a little heavier as well, instead of using what you normally would use. You know, either way, your TP would have hit here if you used your typical TP stop loss, or if you just held it a little longer, it would hit your TP again later. So there's different situations where you can move your stop loss wider, but you would have to move your TP higher as well. You don't want to have like a 5-to-1, you know, risk to reward ratio. This is like horrible risk to reward. If you do something like this, you have one loss, you're like 5 losses, you're 5 trades in the hole. Versus, you know, just having it where you spread this out a little higher, becomes 2-to-1, right? So yeah, I mean, there's going to be different situations where you can change it, but for the most part, if you're applying any of the strategies, you have to understand to be disciplined and just eat the loss if that becomes the case. You know, maybe you made a mistake and you got in a bad trade and you kind of want to hang on to the trade so that you can actually make some profit or come out at break even. In those situations, just eat the loss, right? You made a mistake and you just have to take that loss and move on to the next one. Or in some situations, if there's news, this is what happens a lot too. So I know there wasn't news right here, but I'm just going to use this as an example. Like say if you were trading over here and there was news and you didn't realize there was news, like you forgot there was news, right? And you end up taking a buy right here. I know there's no buy entry, but say you were taking a buy here and your TP stop loss was like 300, something like that, right? We'll just use this as an example. If you screw up and accidentally enter a trade during news when you know you're not supposed to, in this situation, I would eat the loss or I would just pull out early. Those are one of the times I would pull out early. So if you make a mistake and you don't follow all the requirements, then yeah, I would just pull out for a loss early. But if you follow all of the requirements, you just gotta let it hit stop loss. You know, you're not gonna win every single trade. I know I barely lose trades because, you know, I follow all the requirements. And I make sure that I'm trading the direction of bias. But in a lot of instances, you just gotta let it run, either to TP or stop loss. And that's the only way to build your trade psychology. Because if not, you're just going to keep closing trades early, or you're going to end up pushing your stop loss farther back and you're going to take bigger losses. So that's my quick response to that question there, Mario. All right, let me get back to David's question. So Stephen, I see you have another question here. I'm going to skip over your questions, go back to David because we did spend a lot of time on these other questions. Basically what David wanted me to go over today was to look over trades from 10 o'clock up until I guess now. So let me scroll back a little bit. We'll look for, so I'm just going to go through the charts over here and I'm going to see if I could find anything. Okay, so looking over here, basically, we're going to look for some pivot scalp entries. I don't know what the overall bias is here, so we're just going to assume biases in some instances. So like at 10 o'clock right here, I'm going to close some of these things here so that we don't have a mess on the chart. So from 10 o'clock right here, there's actually one pivot scalp on the 10 o'clock candle. Here's an example of a pivot scalp right here, David. So if you're looking to take a pivot scalp at this point, we're just going to assume the bias is a sell because I can't really go back and tell what the bias was at the time. But if you wanted to follow the requirements here for the pivot scalp, confirm overall bias, we're going to assume that it is a sell because we can't go back in time and check right now. The second requirement, you want to confirm a K2 momentum signal that's valid. Right here, we have a valid signal because it's a sell signal with the red candle within it. That's going to be requirement number 2. Requirement number 3 is you want to confirm price is below K2 pivots 3 and 4. 3 and 4 basically going to be these orange and red pivots right here. I'm just going to go and turn off 1 and 2 just for this example here. Show you guys we have a valid signal. Price is below the K2 pivots. You'll enter on the open of the following candle, which should be right here. TP stop loss is 30 to 100, 300. You let it run. And there you go, full TP. So there goes one trade right there, David, from 10 o'clock. Let me go a little further and see if there's anything else here. So I'm going to try to see if I could find any variations. Again, right here, there's a variation right below. So let me just go back over here real quick. Again, right here, we can't confirm what the bias is, as I mentioned earlier, because we can't go back in time, but we'll just assume that maybe bias has shifted and now it's bullish. So again, right here, an example of a V1. Confirm overall bias, we're going to assume it's bullish. Confirm the high low, we have the low right here. Confirm the candle following the high low is a double wick or double body. It's a double wick rejection right there. There's a pending momentum in this trade because there's no buy signal. So we would take a buy right here. Same thing. 130 or 100, 300, you let it run and full TP right there. So there's another example of a V1. Let's see if there's anything else over here. There's no V2 here, or there's no V1 here or V3. The reason why there's no entry there is because there's no pending signal in that direction. Again, right here, here's another one. So there were a lot of trades here, but it's hard to really determine what the bias was because we don't have, we don't have the bias. So right here again, we have a low. It's another V1 entry. Let's see. Let me see if it could fit as a V3. I don't think it'd be a V3 because the stop loss isn't far enough. It'd have to be at least 300 pips, which, yeah, it doesn't fit. So there's no V3 here. I mean, if you wanted to just extend your TP stop loss and then just run it, even though the stop loss was, was a lot closer, you could have you could have done that, and that would have been technically a V3 if you really wanted to. Even this one right here, actually, this one right here was a V3 as well. It wasn't all the way to 300 pips, but you could have, pushed it back a bit, and this would have been considered a V3 and a V1. Let's see, V1. So this right here would still be a V1 though, or actually, yeah, it would be because there's a double body. So again, right here, same situation that we were just looking at. We confirm the overall bias. We can't confirm it because this is at a different point in time. We confirm the high low right here, confirm the following candle is either a double body or a double wick. These two are double bodies right here. We have a pending buy signal with all that met right there. Let it run for 100 pips. And there you go, another full TP. So as I was saying earlier, Dave, there's a lot of entries here. So it's kind of hard for me to like really pinpoint what you're looking for. I'm figuring that you're like probably looking for something specific, but we just looked at like 3 entries right here that could have came up. Let me see if I can find another one here. There's no V3 for sell. There is another. No, that wouldn't fit. That wouldn't fit because there's a signal there. Again, right here, sell signal. So if you went back over here, this would be another pivot scalp entry. And there's a ton of entries that came up here. Another pivot scalp right there, full TP. So, I mean, you could literally go candle by candle and you can see that there is a ton of entries here, David. So I'm not sure exactly what you were looking for, like if there's anything that like maybe you took a trade and it didn't play out, but I can go on for days here and show you like basically all the entries, and there's a lot of entries. Another V1 right here. So I just went over like 6 trades. So if there's anything specific, Dave, that you're like confused with or something that you want me to cover, I can help you with that. I just, your question is so open-ended. You want me to go over every trade from 10 till now. Again, right here, there's another V1 entry. And it's not that difficult to identify, right? It's pretty simple, like identifying where these entries are. This would be a V3. It'd also be a V1. So V3 right there. Again, with these, we're going to assume overall bias was a sell. We can't really tell because it's a different time. We have a high here, opposite candle, swing at the previous high right here. You pretty much let it run. Full TP again right there for a V3. Or if you wanted to take it as a V1, you could have done that as well. They both apply. And these strategies are super simple. I mean, it's really hard to mess them up unless like you're just confused between like the different requirements. But either way, this would be a V1 because we have a high right there. It's a double body. So again, right there, another V1. So let me see if there's anything else here. Yeah, I mean, if there's anything here specific, David. So here's the thing, the bias didn't necessarily shift to a buy, David, because the sentiment was still short. So the bias didn't necessarily change. The fundamentals change, but the overall bias never changed. It just became mixed. So if it's mixed like that, you wouldn't be taking any trades at all, right? So, that's why I was saying earlier, it's kind of hard for me to really go over these trades for you because we knew that there was news at 9, and then also we couldn't really confirm if the bias changed like right now or if it changed at a later time. Because here's the thing, you said bias changed, right? Price is currently right here, and the fundamentals are only up 48 points. So the thing is, I don't think bias changed until like way over here, until this area. So maybe like around 11 it changed. Because the thing is, if it's only up 40 points, then if price was down here, it was probably, or down this area, it was probably still a sell bias. That's why I can't really tell what the bias was. But does that answer your question there, David, or do you want me to keep going with the entries here? Because if there's an entry that you're like confused with, I can drill down on that and I could kind of show you what could have been done differently. Maybe you were trading around like news price. Because if I go over every single trade here, this is probably going to take all day because I already went over like 6 entries here or 7 entries and they all hit TP, but we couldn't confirm what the overall bias was during that period. I'm assuming it was still sell down here, like around this area. So we wouldn't have taken any of the buy entries. I'm just trying to see if there's anything, because I could tell that like right here, it's only 48 points and price is like way at this point. So say if price was to drop maybe, let's see, price range about like 1,000 pips maybe, or not even 1,000, maybe 2,000 pips. So, and this is just a generalization. Like if price was like down here on this area, then I think price would still be, or this area would be a sell bias. This right here would be neutral. Because if it's the fundamentals are up 48 points over here, then I'm assuming like if price was down here, this would have been maybe 0, or maybe it'd be like negative 10 points or something like that. So if there's any specific entries, David, just let me know. Unless if you really want me to go over every entry, I can do that, but I think it's just going to take up like way too much time because there's like so many other entries here that we could look at. Unless there's just one strategy. If there's just one strategy, that'd be easier, but you kind of put out pivot scalps where there was pivot scalp entry here, possible pivot scalp entry here. Either way, all the pivot scalps would have hit. This one right here would have hit full TP. Right? Pivot scalp right there, full TP. And I think this would be easier. Instead of me rewinding time, I'll just go and show you the pivot scalps I would have hit. Again, right here, another pivot scalp, full TP. No pivot scalp right here. Another pivot scalp right here, full TP. Another pivot scalp right here, full TP. Another pivot scalp right here. So there's like a ton of pivot scalps here that came up and they all hit full TP. So this would probably be easier, just going over this like really quickly. Pivot scalp right there, full TP. Pivot scalp right here, full TP. Pivot scalp right here. Oops. Pivot scalp right here, full TP. So basically all the pivot scalps that came up today all hit full TP. Aside for maybe this one right here. But this is already at 1 o'clock, so you wouldn't have taken any trades at this point. Let me see if there's anything else here. I guess I could just eyeball it just to show you guys. So basically I went over all the pivot scalps from 10 o'clock until now. They all hit full TP. There is a possible V3 right here, or V1. That would have hit full TP right there. So as you can see, I mean, I can show you like the entries here. It's just if I go over them like one by one, it's going to take like literally forever. But again, right there, V1, full TP. Nothing here. There was a V1 right here for a sell, it looks like. It's a double body, full TP. There is a V3 right here. There's a low with the red candle, followed by a green candle. This would be a V3. Right there, 53 pips or 530 pips. Another full TP right there for a buy. This right here looks like it might have been a V1 or even a V3. Full TP right there. Right here again, this wouldn't be an entry because there's a signal on that candle, so no entry off that. Again, right here, if you were to take a sell, full TP. Right here again for a buy, full TP. So this is why a lot of people in K2 locked in like some massive profits today. And if you guys look at everyone's profits, I didn't trade during this period because of the news. I don't like trading when there's news because it's too risky. But I mean, you guys have seen everyone else here locked in some massive profit, like Kevin over here. He traded both ways. I don't think he really traded with the bias because the bias was shifting, but you can see he took buys and sells for like some huge profits right here. Took buys towards the end, total profit of 28K for the day. So there's a lot of entries here that you could have taken. Even Narith over here. I know some of you guys were talking to Narith in the group as well. Where's Narith's profits? Right here. He took buys and sells for some pretty big profits as well. So yeah, unless you want to be a little more specific, we can look at the specific trades. David, but I think I looked at like majority of them already. So if you want to look back and if you see anything that like you're confused with, then we can dive into that. But I think right now we kind of pretty much covered for the most part all the entries um, that we could just see from a bird's eye view. So, all right. Other than that, I think that's it for David's question. So yeah, David, if you want me to cover anything specific, just let me know. But I think for the most part, we pretty much covered the majority of the entries that we could just eyeball from 10 o'clock till now. Let me scroll down a little further. Okay, so Steven's question right here. Steven's asking, some days, even though bias was sell, full TP was achieved from buy entry for breakout. How do you know which day to avoid buy entry when bias is a sell? Sorry, Steven, let me reread your question. So Steven's basically asking, how do we know which days to avoid a buy entry when the bias is a sell? Simple, Steven, all days. If the confirmation isn't there, then you don't take the trade, Steven. This is kind of how you blew your account, right? Like for like 3 months, you literally had 0 losses. And that was because you were trading the direction of bias, right? The one day that you decided not to trade against bias, you blew your account. Like you literally like, I don't know how like this happened, but like all of a sudden you just changed the way you traded that one day. So quick, like, you know, straightforward answer to your question is you don't trade when there's no bias. You trade when there is a bias. You're literally gambling when you're trading that way, Steven, because like you follow directions for a whole 3 months. Like I could pull up your profits here, Steven, and it's crazy. Like it blows my mind that like you literally went like, I don't know, how long did you go, bro? You went from like May. So you went from like February, like April, literally every day you had all wins. It was like 1,000 profit every single day for like 3 months, dude. Every day you had good profits. Oh, this is mine. Like every day, literally every day you made 1,000, 1,500, 1,075, 1,140. And then like the one day that you decided to not follow directions, you like you blew your account. So, you know, and like I could go through here, like this is even till May. So like May, literally all of May, like you literally had straight profits here, Steven. You had like no losses. If you look at all of so this is when you pass your challenge. You remember this? You literally had 0 losses. You had straight profits for every single account for like months, and it was crazy. Like you literally went from like May, April, March, I think. Well, whatever. Anyways, just, you know, back to your question. My recommendation for you is to just don't take trades when there's no bias. I know like you just want to take trades like every day, but you know, like when you started doing that, that's kind of when you started to go into a downward spiral. Like even like yesterday, right? You said no more gambling, but you still took a trade and you lost, and there was no bias. So when was it? It was like yesterday, right? Yeah. So today, like you took a bunch of trades today too. I don't know what you did here, but you said you took a bunch of micro scalps. You probably should have just kept it to like 1 or 2 trades like you've been doing. You took like about like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like almost 10 trades here. When you know, typically, so here's like, it's a back and forth right here, right? You have like a bunch of wins and losses. Yeah, this was on the 21st. So what was this, Monday or Friday? You took an entry when I said not to take an entry, and you took a loss. So because there was no bias that day. So you need to like stay on track with like making sure, like, see, you've been in a downward spiral. Yesterday you had a loss, and the day before that, and I didn't take any trades that day. So on the 23rd, let me just try to compare it with like what I did here. So on the 23rd, I took no trades, right? I literally took no trades yesterday. You took a trade still, and you ended up taking a loss, unfortunately. Where's our chat, Steve? Yeah, unfortunately, you traded on that day when I mentioned not to take a trade, and you took a loss. And then again on the 21st, you took a loss on this day as well, or the 20th. And actually, I had all wins. I don't know what happened. Oh, I forgot. Okay, so on the 20th, this is when you were flying back from like India, and you ended up trading while like you were walking and you weren't paying attention. So like we made a lot of profit that day actually, but you had a loss. So I think the main thing for you, Steven, is to like focus on the breakout like you did previously. Because just looking at your trades from now until previously, like today you took like a bunch of trades. You did okay today, but you still took a lot of trades. Back before, you would take like one trade. Like you took one trade, you make 1,000, right? The day before that, you take like one or two trades, you make 1,000. So you're still doing things differently, right? Because before you would take one trade, like literally one trade, you make 1,000. You take like 10 trades, you have wins and losses. So you could kind of see what you're doing differently here, Steven. Before you're like more focused and you took one trade a day and you hit your profit goal. Now you're taking like 10 trades and you're going back and forth. And that's why your consistency is kind of falling off. Like here, you took two trades, you still made 1,400. The day before that, you took two trades, you made 1,800. The day before that, you took one trade, you made 1,045. So I think you need to go back to what you're doing before. Don't take any more risky trades and just trade in the direction of bias. So if there's no bias, then avoid the trade. And if there is a bias, then take the trade, because you want to take high quality trades. That's going to be the main thing for you. Yeah, Steven said, when I took buy entry, when bias was a sell, I still reach goals sometimes. Yeah, but you can only get lucky so many times, Steven. So my advice to you is to just follow the directions and stick to quality trades. Because every time you take a loss, we have the same discussion. It's me advising you to stick to trades that are in that direction. And I'm glad that you understand now, because I can see you in the chat. You do understand. You can see the difference. Like just go back to our chat, Steven, and look at like your trades in the past. You'll see where you kind of went off. It's you need to get back into that phase where you were having no losses for like 2-3 months straight. Because if you can do that, you'll bounce back. I know you blew like one account, but you can make it back. It's just going back to how you were trading previously versus how you're trading now. So yeah, Steven. Hopefully that explanation kind of helped you understand a little more like what you're doing differently now from what you did before. But if you still need help on it, just remember to look back on the steps. Like for the steps here on the breakout, just remember step number 2, confirm bias. If this bias isn't there, then don't take the breakout. If the bias is there, then yeah, take the breakout. I think this is the main thing that you need to focus on, because the thing is, you're taking trades when there's no bias, and your trades are going to be erratic. And there's no guarantee you're going to hit the trade. I mean, there's no guarantee you're ever going to hit the trade, but at least you have a higher probability if you're trading with the direction of the bias. So moving forward, I think you should just, if you need to like tape this to your computer or tape this to something, I don't know, to your hand or something where you can like not miss it. Just always think of this, confirm bias. That's always going to be number 1 for you. If this isn't met, then don't look at the other requirements. If it's met, then go ahead and move on to the next requirements, or just listen to me on the live, because I typically let you guys know if there's a bias or not. So, all right, Steven, there goes your question there. Let me scroll up. Swelly's asking, I'd love to go over any V3s you would have taken on the 10-minute. So let's go over to the 10-minute real quick. Man, look at all the liquidity here that got hit. So if you guys were following the liquidity here, I mentioned earlier today, this is when the live session we got off. It basically hit liquidity right here. Could have run it up to the next area of liquidity. Pretty solid. But let's go back to Swelly's question. So Swelly's asking if I could go over any of the V3s that I would take on the 10-minute. So I don't see anything here specifically. This one right here. So this is a bit subjective right here. The thing with this over here is I would probably take it because I would have waited for it to come down because our retail sentiment was high. But like going over the requirements that I kind of just discussed with you guys and with Steven, trading the direction of bias. If I was following my direction strictly, I wouldn't have taken the trade here. But it looks like there was one here that you could have possibly taken. Let me see how far the stop loss was. On this one right here. Yeah, I think, well, I mean, I probably would have taken this for like a partial move because, it is a bit of a risky entry because the bias wasn't overall. So like we had a sell bias here with regard to retail sentiment, but the fundamentals were bullish, right? So, well, they're not strong bullish. They're only up like 48 points. So it's not above 100 points. So it would be more on the sell side because the sentiment here is 61% long. So you'd still be looking for sells here. And this doesn't necessarily show a shift in bias because in order for the bias to shift, this needs to be above 100 points and needs to be consistently above 100 points. So right here, you'd probably have a weak bias, but the bias for retail sentiment is still a sell. So if I saw this trade here, and the reason why I would have taken this too is I would have seen this as price coming back down after the news because, obviously Powell spoke over here at 9:20. So let's mark up 9:20. 9:20 is right here. From this point right here, Powell spoke, pushed price to the upside. And from here, I would have expected it to come back down. So this is like a maybe entry that I might have taken. And you can see right there that it would have hit TP. Let me see if I can find a different one. So that one would have been kind of okay, possibly. Right here, when Powell started speaking, I might have taken this even though this would have been risky. I know this wouldn't have fit the requirements because the confirmation here just wasn't there for the overall bias because obviously the retail sentiment is still short, so we'd still be looking for sells. But if you were to ignore that and you're trading based off news, because whenever Powell speaks, price typically goes up. I wouldn't necessarily take this if I was looking for something risky. If I had like a yellow account that I didn't really care about and I would take risky trades, this would have been a V3 because the requirements would have been met aside from the overall bias. So looking over here at the V3, if you were just to disregard the first requirement, which I don't recommend you guys do, this is like for someone that like knows what they're doing. Like if you really know the V3s in and out and you guys are good with confirming, where price is going. The only reason I would have taken a buy here is because Powell is speaking. Powell started speaking here at 9:20. This entry came up at about 10 o'clock. I'm pretty sure he was still speaking because he usually speaks for about an hour. So if he was speaking right here, this would be a V3. And this is more of an advanced way of trading. It's like if you know where price is going to be going temporarily, I would have taken this for a buy and then it would have hit your TP. So these aren't like quality entries, but they're entries that I personally might have taken if I was trying to trade speculatively with regard to Powell. Other than that, I don't know if there's any other entries here. For the most part, we had a sell bias. So, for the most part, we would be looking for sells here, but I don't think there were any sells that came up here for any V3s at any point. This cuts into like the previous day. There was no bias yesterday, so we wouldn't have taken any trades from this point. Basically, from the 23rd, there were no entries. So basically from this point up until here, there's nothing that we would have taken from this. Is there one that you like are specifically like curious about, Swelly? Because if there's one that you're like curious about, I can take a look at it. But this whole period right here, we didn't have a bias. If you guys remember the session from yesterday, I didn't take any trades because there was no bias. Sentiment for retail was a sell, but the fundamentals were bullish. So I wouldn't have taken any trades here because I typically follow all the requirements here. And if there's no overall bias, obviously I wouldn't have taken a trade. The only reason I would have gone against this requirement over here was because we knew price was going to be bullish since Powell was speaking. Here, let's see. Swelly said, and the TP will be equal to the stop loss. Yeah, Same requirements, Swelly. It's just your minimum stop loss would be wider. So right here on the requirements, minimum stop loss of 300 pips on the 1 minute, 500 pips on the higher time frame. So like typically, if you were to take any entries on this, on any of these here, like for example, if you were to enter something like this right here, even though it didn't fit the requirements, you'd have to have at least 500 pips. It's like 600 pips right here, so it would fit the requirements. But everything else is pretty much the same. It's still a 1-to-1. Yeah, and this is a good strategy to focus on, Swelly. I think this is one of the more accurate strategies that's not as difficult to follow. I think the thing with applying the 10-minute though is that you guys have to understand how to adjust your lot sizes, because you're not going to use the same lot size if your TP is 600 pips versus if it's 1,000 pips, right? Because sometimes your stop loss is going to be super high because the 10-minute moves a lot wider. Let me see if I can find an example. Like for example, over here, there's a V1 over here. For a V1, I wouldn't be using small TP stop loss. I would use a 1-to-1. So like if you were to take one here for a V1, you could have taken a 1-to-1 here, and your TP stop loss would be like nearly 1,000 pips. Right on the 10-minute right there. So yeah, let's see, you're talking about one from this morning. Let me see if I can find it here. So one from this morning, I'll mark up 6:30 right here, and I'll just go back to see if there was anything here. So there's nothing right here. This one didn't come up. This one isn't one either. This is probably the one that you're referring to. It was the one at 9:10. So this might be the one that you're referring to, Spolly. This one right here would have been a valid entry. The only reason I know it'd be valid was because I know that like when we got off the live session, overall bias was still a sell. So this right here, retail sentiment was bearish, fundamental bias was bearish, technical bias was indecisive, it was blue. So overall it'd be a sell bias. So this would have been a short position right here. I think this might be the one you're referring to. And as I mentioned earlier, see, stop loss could be super wide sometimes. Like for example, right here, it's 1,111 pips. So this is a big move. You wouldn't be taking, like I wouldn't be taking a 10 lot on this trade because it's such a big move. I'd probably be taking it with maybe a 3 lot or a 5 lot, because this is a huge move. Like if you were to trade this right here, so it's 1,110 pips times 10 if you're doing a 10 lot. This is an $11,100 risk, right? I can't take risk like that, because if it stops me out, it's gonna blow my FTMO. So I'd probably use like a 5 lot. So 5 times 1,110, I'd be risking about 5,550 to make 5,550, which is okay because it falls within my parameters. So I'd probably take this with a 5 lot. Obviously it would hit TP right there. So I think this is the one you're referring to, right? Swelly, I'm not sure if there's another one that you wanted me to look at, but I think this is the only one because this happened at 9 this morning. Yeah, so basically same requirements. You put your stop loss at the previous swing. You just need a minimum stop loss of 500 pips. So this would have been the entry that you were looking at, and it would have hit full TP. Other than that, I don't think there was anything else that we could have taken. Like for this right here, I know there was a buy entry that probably would have hit TP, but I wouldn't have taken it because I know the bias was probably not a buy at this time. Because if it was a sell right here, it'd for sure be a sell still on the next entry. And this right here would have hit full TP too. So, I mean, you're free to take trades against the bias, but it's not something that I would recommend, not something that I would do, and not something that I would recommend unless like you knew where it was. Yeah, there's no point in risking it. Well, I mean, yeah, you get lucky. Yeah, it's not worth it to me either. You'll get lucky here and there, but say if you end up taking a loss and then you start revenge trading, it's not going to end well. And that's typically what happens with a lot of people. You take one loss, you want to make it back quick. You take the next risky trade, you take a second loss, and you just keep adding on losses after loss until you blow your account. So definitely a better reason why, you should probably avoid it. So Steven said yesterday it tipped trade in direction of bias and had a strong candle with little wick, but it hit stop loss. So there was no bias yesterday, Steven. I'm not sure what bias you're talking about because I didn't take any trades yesterday specifically because there was no bias. So I don't think you were analyzing the bias correctly, Steven, because I know you sent me the message yesterday about taking a trade, but there wasn't a bias yesterday. If there was a bias, I would have taken the trade and I would have had wins, but I took 0 trades yesterday. So if you can give me a markup, Steven, of what trade you took or like what you want me to cover, we can look at it. But I know for sure there was no bias yesterday because I didn't take any trades myself. You can go back and watch the live sessions yesterday if you want, Steven. So here's what you can do because I'm like 100% positive there was no bias yesterday. You can go here on the page, Steven, go to videos, go to the live session from yesterday. Today's the 24th, yesterday's the 23rd. I could even pull it up for you right here to show you there was no bias. You got to make sure that you're actually looking for a bias. I think you might be confused and you might just be thinking there's a bias, but I know for a fact there wasn't a bias because I would have taken trades yesterday if there was. So let me see if I could find, I'm just going to fast forward to, okay, so I looked at the bias right here, right? So let me see if I could, so I get higher quality here. Okay, so Steven, you can see here that the retail sentiment was bearish, right? And I'm gonna go to the next page at the fundamentals. Fundamentals are bullish. So if fundamentals are bullish and retail sentiment is bearish, there's no bias there, right? It's indecisive because one's going up, one's going down. So that's how I know there wasn't a bias yesterday. If you can tell me like when the trade was, I can probably point it out for you, but there wasn't a bias. I even, so right here, if you rewatch the, and I know this is a trade you're talking about the breakout, right? So if you go and just rewatch this, I like literally told you not to take the trade, but you still took it that day. So if you want to go back and rewatch it, Steven, feel free. I mean, you can just fast forward to 10 minutes into the session. And I think I even told you during the last, I said, Steven, don't take this trade. And you still took it. So if you want to go back and rewatch it, Steven, you can see it right here. I'll just show you. Okay, so here's a couple of things here, Steven. I pointed out even other things. I said the candle prior is too large. So I said, don't take the trade here because it was near the sessions and it was also too large. So you kind of just ignored everything I warned you about yesterday and you still took the trade. For one, there was no bias. Two, it was right near sessions and the candle prior to entry was too large. So if you want to go back and watch it, Steven, you can watch it, just fast forward to 14 minutes and 33 seconds and it'll, you'll have an understanding as to like why you lost that trade. And there's a reason why I didn't take the trade myself because of this specific analysis here. So if you want to go rewatch it, Steven, go ahead and rewatch it. But I pretty much explained there why we didn't take the breakout and why you shouldn't have taken the trade. I mean, you can even fast forward through it. Okay, but anyway, Steven, just go back and watch the video from yesterday because I know you're still confused about it, but for one, there was no bias. For two, it was right next to sessions. For three, it was the candle was too big. So there was like 3 big red flags. Why not to take the trade? And that's one that you took. So, okay, now I understand like why you took the trade here. Because I was trying to figure out like, why did you take a loss yesterday? Yeah, I can see right here. So you took this loss here and you said, was the wick on the top too large? And I said, no, it was because the wick on the bottom, because you're not looking for the wick on the top if you're looking for a sell. You're looking for the wick on the bottom, Steven. So if you go back to the breakout strategy over here, you kind of like analyzed it wrong too, because we were looking for a sell. You're looking for a red candle with minimal wick on the bottom. So you're looking at the opposite thing. You're looking for a wick on top when you're supposed to look for a wick on the bottom. But I did explain there the reasoning behind it. So if you want to go back and rewatch it, Stephen, go ahead. But I'm gonna move on to the next question here. So let me scroll up real quick. I went over Swelly's question. Let's see if there's anything else here. Hey, Matt, how's it going? All right, next question is from Sam. Sam's asking, can you explain what V1 and V3 is? Yeah, sure. Let me see if I can find an example here. We'll go on the 1 minute, it's easier. Okay, so let me see if I can find an example of V1, and let me see if I can find an example of V3. All right. So there is an example of, no, there isn't one there. Okay, so there's one right here. So I'm going to show you first an example of a V1, Sam. So for the variation V1, you want to confirm the overall bias. We can't do this right now because this is at a previous time on the chart. So we can't really confirm it. We're just going to assume that it's bullish here just for this example. So I can show you like how V1. So say this overall bias was bullish. We're just going to assume it was so that we can pass the first requirement. The second requirement, you want to confirm the high-low using the high-low indicator. So right here we have a low. And right here we have a high. After that, you want to confirm the candle following the high-low is either a double wick or a double body rejection. So right here, you can see that there's no double wick because the low is below it, but you can see that there's a double body. So this body right here lines up with this body. If I draw a line exactly on the body right there, you can see that they align up, right? So requirements 1 through 3 have been met. For the fourth requirement, you want to confirm pending momentum in the direction of the trade. So right here, we have a sell signal. So the next signal has to be a bullish signal. In order for it to be pending, there needs to be one that's, going to happen after it. So right here, you can see there's a buy signal, then a sell signal. The next signal is going to be a buy signal. So for the fourth requirement, you want to confirm there's a pending momentum in the direction of the trade. Right here, the next momentum is going to be a bullish buy signal, right? So that's going to fit the requirement number 4. And with all those requirements met there, you can enter on the open of the following candle, which should be right here. So as soon as this candle closes, you enter a buy. Your TP stop loss is going to be 100, 300. You have it set up right there. You let it run. And there you go, full TP. That's an example of a V1 double body. Let me see if I can find a double wick. So that's an example right there for that. If I can find a double wick, I'll show you. If I can't, then we'll just move on to the V3 for you. I thought I saw one earlier, but I don't see it anymore. No, I don't. Let me go a little farther back. Okay, so there's one. No, actually, there's not. Not right there. I think there was one earlier this morning. No, there isn't. No. Yeah, so there's no double wick. Let me just go back a little further. Let me see if I can find one for you, Sam. Nope. This is a double wick, but it's not going to be an entry because there's no pending momentum for a sell. A lot of these, I mean, like if you guys know these strategies, like I know these strategies like the back of my hand, so I don't even have to really think about it. I just take a quick look and I'm like, okay, there's an entry. Okay, there's one right here. So here is and we're going to disregard the opening price here because this was from before the opening price was actually met. This opening price happened at 6:30. This entry was at 4:56. So this is before this even appeared. So anyways, back to the requirements here for the V1. Same thing, we're going to confirm the overall bias. We can't do that right now. We're just going to assume that it's bullish for this example. So confirming that it was bullish, we can look for bias. Again, you want to confirm the high low. We have a low right here, and then we have a high right here. You just want to make sure that for the low right here, you have a double wick or a double body. So first requirement, we confirm overall bias. We're going to assume it's bullish. We confirm the high low. Third, you want to confirm the candle following the high or the low is a double wick or double body. You can see right here that there's two wicks touching the same price point. Those requirements are met. Fourth requirement, you want to confirm there's a pending momentum in the direction of the trade. For this right here, you can see that there's a sell signal. The next signal has to be a buy signal. So with that said, fourth requirement's met. You would enter this trade right here for a buy. You would set your TP stop loss to 100 and 300. You let it run and full TP right there off the next candle. So that's an example of a V1 for both double wick and double body. Going over to the V3, which is a lot simpler. Let's see. All right, here's one right here. We're gonna do the same thing. We're just gonna assume because we can't confirm the overall bias, but again, right here for a V3, you want to confirm the overall bias. Again, we're going to assume that it's bullish. Just for this example here, you want to confirm the high low. It's pretty much the same thing you do previously. It's just a few requirements are changed. So confirm the bias, it's bullish. We confirm the high low. Here's a high and here's a low. We confirm the high is a green candle. This isn't a green candle, right? So we're not going to look at this for a sell. We want to confirm the low is a red candle. So right here's a low, red candle. Third requirement's met. For the fourth requirement, you want to confirm the following candle is opposite. So right here we have a low with the red candle. The next candle is a green opposite candle. With that said, requirements are all met. Fifth, you just want to confirm there's a pending momentum. We have a sell signal here, so the next signal has to be a buy signal. With that said, you enter a long position right here. You set your stop loss at the previous swing, which would be right here, 400 pips. The minimum has to be 300 pips. It's 400, so it fits the requirements. You do it for a 1-to-1 risk reward. You have it set up right there. You let it run, and there you go, full TP for a V3. So super simple. I mean, both the strategies are very simple. You just have to practice it and apply it. Once you apply it enough times, you don't even have to think about it. Like for me, I don't have to think about any of the entries. I just take a glance at the chart. I'm like, all right, there's an entry, and then I can just hit buy or sell as soon as I see it. So that is the difference between a V1 and a V3. All right, so perfect. Oh, I just saw your message, Sam. Sam said, okay, you just explained it. Thanks. It's all right. So I just explained it again, which is no problem. That's just another refresher for you guys there. It's not too difficult. I mean, I can easily spot these without even thinking because I've spotted them so many times. That's why it's important that you guys practice during the off session. Like during the live, it's cool. You can like focus on like my analysis and what I'm saying on the session. But during times like this, like when we're not trading, this is a good time for you guys to go and practice. Just go back and see entries, right? It's not that difficult. Like you can literally just go back and like, okay, there's a V3 right here, right? A V3 and also a V1 possibly. You can just go back. Okay, there's a V3 right here, right? V3 and possibly a V1. Again, you look over here and you're like, all right, this is another V3 right there. So it's not that difficult once you guys practice it. It's difficult at the beginning, but eventually you guys will, you know, it'll just become second nature for you guys to identify it. Scrolling down a little further, let's see, Brian's asking, check the chart around 130. Sorry, Brian, I just saw your message. I'm not even sure what you're referring to. I think you're referring to the trades that I was looking at earlier, right? So I'm just gonna skip over that. If there's something specific that you wanted me to look at, Brian, just like put another message in the chat. I'll just pull up 130 real quick and see if there's anything there that that's relevant. So, all right, so this is 130. Oh, you were probably giving me example for a V3, right? So yeah, there was a V3 right here. This wouldn't fit the requirements because you need a minimum of 300 pips. So going back to the V3 right here, for the 1 minute, you need a minimum of 300 pips. I know it's really close. So like in some instances, if you really want to take a trade and you just, you're willing to hop into it, yeah, sure, you can take it and you just, spread out your stop loss a little wider and then let it run. And then there you go, full TP. So it just depends on your risk tolerance, guys, right? Like if you guys really, really want to enter a trade, take it with confidence. If you lose the trade, you'll understand that you skipped one of the requirements here, right? That's just something that you have to live with. But there's a reason why we have a minimum stop loss, because I can see this trade came up during London session. Spread was probably wide on London open. So that's why you would probably want to make sure that you had enough leeway for the stop loss. Scrolling down further, Craig said it's one of those things that the more you train your eyes on the charts, the harder it is to unsee the strategies. Yeah, exactly, Craig. And that's how it is. Like for me, I see it every single day because I trade live with you guys every morning, that it's hard to unsee. Like literally I can just glance at the chart and I can see multiple entries just by taking a glance. Peter said pivot scalps is the easiest methods in KT. Yeah, I agree. I think it's definitely like all-time easiest probably. Tody's asking, Sean, can you check the pivot scalp from yesterday at 12:23? Sentiment was for sell. Thank you. Is this a valid trade for you? So let's see, 12:23. That's on London Open. I personally don't trade the first 2 hours of London. So if you guys remember, like whenever I discuss London Open, I don't trade the first 2 hours. So from like 12 to 2, I don't take any trades during that period because you get the erratic movement like we do for the breakout. It's the same thing. It's just a different session. So for London, I typically don't I don't trade London at all. But if I did trade London, which I did previously, I don't trade from 12 to 2 p.m. 2 a.m. because that's where you have a lot of manipulation in the market. So let me just pull that up. So you said yesterday at 12:23. So 12:23 is going to be right over 12:23. Yesterday at 12:23. So Tody, are you talking about my time or is it your time? Because I'm looking at 12:23 right here. I'm not sure if you're talking about nighttime or daytime, because 12:23 would be right here. Unless you're talking about daytime. Let me go to daytime. If you're talking about daytime, I for sure wouldn't have taken trades at that time. There was no there wasn't a bias yesterday, so I for sure wouldn't have taken any trades at that time. But let me just see. Nighttime. Okay. So yeah, 12:23 nighttime right here. That would be midnight. London Open. That'd be right over here. So the entry actually happened like yeah, it's not nighttime for me, Tody. 12:23 is noon. That's afternoon for me. So you said nighttime. Are you okay? Noon. Yeah. No. So I for sure wouldn't have taken any trades around that time because there was no bias at that time. I told you that's short answer for your question, but I'll go ahead and take a look at it over here. There's a couple of reasons why I wouldn't have taken that trade. You would have taken that trade close to market close because market closes around 1. So you don't take any trades on those last hours of trading time because that's where you get a lot of the manipulation because people exit before the next trading day. If you hold a trade into the next trading day, then you start to incur the swap fees. So let me just go to that time. You said yesterday at 12:23, which should be afternoon or noon for me. 12:23. Yeah, so you can see right here that there's a huge gap. This is because market closed around that period. But yeah, going back to this over here, 1223. Yeah, like I wouldn't have taken this trade right here specifically for because for one, there was no bias yesterday. That's why I didn't take any trades yesterday. So for one, there was no bias. Let me see if there's anything else here that could have been an issue. Let's see where the session's at. Also, let's see how far the sessions was from here. Sessions were kind of close as well. So if you were to take a trade here, it was right at the session. So here's a couple of reasons why I wouldn't have taken this trade. So reasons why I would not have taken this trade. For one, it's very close to market close or New York session close and day close as well. So this is when the day closes and then the day overlaps. Close to London high. Let me see where opening price was too. So yesterday, yeah, opening price was too far, so it wouldn't even matter. Opening price was like way down here. So a couple of reasons why I wouldn't have taken this trade. I mean, maybe it still hits. It still would have hit TP, but I wouldn't have taken it. I don't take any trades after 12. That's like my well, I don't take trades after 8 anymore. But if I was to trade the mid-market reversal, I still wouldn't have taken trades around this period because it's so close to the day close. Because if you go forward a little further, you can see that it wasn't too long from close over here, and you guys can see the erratic movement right here, right? So let me just go over here a little bit. So this is basically, I'll clean up the chart a little bit here, just so that you guys can kind of see. So here's market close right here. As you can see, there's a lot of volatility around this period right here, right? Like you'll see a lot of price movement to the downside because people are trying to sell off before the end of the day, and then you see people buy here because they want to buy the dip. So people sell off and people buy the dip. You get a lot of manipulation. This is an hour before market close. I don't take any trades around this period. Taking trades around here is basically like taking trades on Friday before everyone leaves for the weekend, right? It's the same thing. It happens every day. Also, if you hold trades into the swap, you have to pay the swap fee. So if you hold trades into this period, and the reason why you wouldn't want to take a trade is because say if you're in a bigger trade and you're holding on to it, you'd have to hold it over into the next day, pay interest on that trade. So that's why I wouldn't take any trades around this period. It does hit TP here, it looks like, but not one that I would necessarily want to take. So reason why is too close to New York session close, day close, close to London high. I'm trying to think if there's anything else here indicating why I wouldn't take the trade. Because I'm all about being careful, right? So for me, there's more reasons why I would not take a trade versus why I would take a trade. Because I'd rather not risk taking a loss. I don't think there's anything else that would have deterred me from taking a trade. It was mostly just because it was near the sessions, plus it was at the end of the session day. So Kodi said it was almost 40 points till the session. Yeah, I mean, it would still be close, my perspective. So yeah, it was still, I mean, it's only 300 pips. It's not really that much because the thing is, if you're talking about spread, around this period of time, the spread gets kind of wide. Like if you look at your chart right now on FTMO, your spread's 320. So if you were to take this trade right here, Kodi, okay, so say for example, you had a 320 spread, right? Your actual entry would be over here. I mean, he would have hit your stop loss at that point. So the I don't know if you were paying attention to spread, but if your spread was like 320 points, you'd already be automatically in a loss because you would have to cover the spread before you make any profit. So realistically, if you were to take any of these trades here, I mean, well, either way, you'd still have a spread, right? You're not going to have a zero spread totally, right? So even if you had like the tightest spread, your spread would still be 100, like about 110 to 140 pips. So you'd still be in the negative this much. So that's why you hit your stop loss before you hit your TP because your spread's too wide. Yeah, but this is like as low as your spread can go. Like it's impossible for it to be below that. If you have a spread less than 110 pips, Tony, then I want to know what broker you're using because I've been trading for years and there's no broker that has any spread that's tighter than this. Then it's like under 100 pips. So this is what your spread would have been if you had, if you entered the trade. So you'd be entering right here. So realistically, you'd have to cover. You'd have to cover this plus another 100 pips. So you technically would have to cover this much. That plus another 11 points, which would be 21. So that's why you would have hit you didn't get pulled out of the trade, even though it would have hit TP. If you had zero spread, like you're kind of referring to, you would have hit your TP, but you didn't because your spread's too wide. Yeah, I know it's unfortunate. It happens, Tony. And the spread does get wider on this period. So I don't know what your spread was like, but this is like as low as it gets. That's why you always have to factor in the spread. And that's why I only trade it like from 6:30 to 8. Because that's when the spread's really tight. Like the tightest that your spread will get will be like probably 100 pips. For FTMO, this is the tightest. I've never seen it less than 110 pips, and FTMO has pretty good spreads. Unless you have a zero spread broker like TFF before. When TFF was on their older, oh, it was 14. Yeah, so your spread was actually over here, Tony, which is unfortunate because you got in like if you had a zero spread, you would have hit your TP. But if your spread was 114, you technically would have to reach this much just to hit your TP. Yeah, no, it sucks. Yeah, Tony said no, the move was only 9 points on your MT4. Yeah, so if the move was only 9 points, then you would have to, you're kind of short by like, I don't know, my math sucks. So you got to do 23 minus 9. Yeah, you were short 140 pips or 14 points. Yeah. But yeah, the reason why I wouldn't take the trade during this period, although, it would have hit or it would have lost, was, okay, so maybe we can just ignore this. The main thing that I would have, this is the main thing that I would have, you could just ignore this because, as you mentioned, it is kind of far. But for me personally, I don't like it to be anywhere near it. Like what I'd be looking for is if it'd be like below it. This is like where I would want to be trading down here. Like I don't want it to be anywhere near it. But even if you were to ignore that, it would still be too close to the day close. I'd recommend that like when price gets to 12, don't even look for any more trades. Because you can see here, you probably saw like some manipulations. Price kind of went down, then it went up, then it came back down, and then it went back up, and then it died once it got close to the close right here, right? And then this is like dead period. But you do get like the volatility spikes right here. So yeah, unfortunately hit your stop loss, Tony, but in the future, I would just stop trading at 12. If you guys remember my analysis, typically I have like, this is where I mark up the mid-market reversal. So you get most of the volatility till like 12. So like about 9 to 10, you get the mid-market reversal. So you can see from this point right here, we get off the live session at 8 o'clock, right? So around 8 o'clock, price pushes up a little bit, consolidates. It starts to make its mid-market reversal from this point. And then you get the bounce around And then right here, people are trying to get in and out of the market right before close. So yeah. All right, other than that, let's see. I don't know if you want me to go any further, Tony, but I think that's about it for that trade. Sucks that it hit your stop loss, but it is what it is. All right, next to the next question. Let me see if there's anything else here. So I'm done with Tody's question. Done with Swelly's question there. Donovan's asking, hey, Sean, can you go over the 10-minute snipe if you haven't already? Yeah, sure. So let's go back over here to the 10-minute chart. I'm going to turn off the ones that we're not using. So we're using these indicators right here. All right, let me see if I can find a snipe over here. I don't think there was anything from today. Yeah, nothing over here. All right, here's a snipe right here. It's a really tight snipe, but it is a snipe. All right, so here's the K2 snipe strategy. For Donovan. So looking at the snipe strategy over here, again, we can't confirm what the overall bias is. We're just going to assume that it was a sell bias because we're looking for a sell right here. Because this is at a previous time on the chart. This happened yesterday at London Open, or this morning on London Open at 12:30 a.m. We're just going to assume the bias was a sell. I think it was a sell, so we're just going to assume that. Basically, once we have that requirement met, we look for a wick rejection off any of the K2 pivots. You can see this candle right here is rejecting off the blue pivot and the orange pivot right here, which is pivot 2 and 3. So with that said, we have requirement number 2 met. For requirement number 3, you want to confirm a wick rejection off a K2SR zone. To find that, you'll use the K2SR V2 indicator. You can see the mark, the chart's kind of messy. So what I typically do is I just draw my own zone over it and then I'll turn it off so that you can see that there's an actual zone right there. The same wick is rejecting off the zone. So requirements 2 and 3 have been met. For the 4th requirement, you want to confirm that the wick rejecting off pivot does not touch the candle body. So you just want to make sure that this orange pivot right here, the farthest pivot, isn't touching the candle body. The body's down here. So it's so far from it that you can confirm that it easily does not touch it. With that said, you would enter on the open of the following candle, or actually, sorry, let me go back over the requirements. First requirement, we confirm the overall bias. We assume that it's bearish. For the second requirement, you want to confirm a wick rejection off of any K2 pivot. It's rejecting off this orange pivot right here. For number 3, you want to confirm the wick rejection off the K2SR zone. It's rejecting off this zone right here. And for the 4th requirement, you want to confirm that the wick rejection off the pivot doesn't touch the candle body, which it isn't right there. Lastly, you just want to confirm that you're trading in the direction of momentum using the K2 momentum indicator. You can see right here that the most recent signal was a sell signal. So momentum is swinging downwards. After that, you can enter this trade for a short position right here for 500 pips. And if you let that run, I think it already hit TP right there off that initial candle. So you can see right here where it kind of has a dot. It goes like straight to the TP and then it swings up. So there's one example there. Let me see if I can find a better example. This one was like during London, so it's not one that we would typically be looking at unless you guys were trading London session. Let me see if I could find one that happened during a New York session. Because you typically want to trade this strategy during New York session when the volatility is, on your side. If you trade it during Asia or London, volatility might not really be there, or you'll have like some manipulation as price bounces, back and forth. Because if you trade during London Open, it's similar to trading during New York Open. Looks like we have another one right here. So this is actually a cleaner example. So I'll start from the beginning. Here is the snipe strategy. For the first requirement, confirm the overall bias. We don't have an overall bias here, or we can't confirm it. So we're just going to assume that it's bullish because we're looking for a buy here. You want to confirm a wick rejection off any K2 pivot. You can see that this red candle right here is rejecting off this red pivot right there. You want to confirm that a wick rejection off K2SR zone. You can see that there's a zone right here. I'm just going to go ahead and draw a rectangle right there to facilitate the zone. I'm going to go ahead and turn this off, and I'll just replay back to that specific price point. Right there. I was looking at that red candle right there. So basically right here, we confirm a wick rejection off the K2SR, a wick rejection off the K2 pivot. You want to make sure that this pivot isn't touching the candle body. Let me just rewind it by one, so you know which candle to focus on. This red candle right here. This wick is rejecting off the pivot, the body. The pivot isn't touching the body of the candle. And you want to confirm that you're trading in the direction of momentum. Right here, we have a bullish momentum signal, so you're looking for a buy. And with that said, you can enter on the open of the following candle, which will be right here. So you set it to a 500 pip stop loss TP for a 1-to-1 risk to reward. You let it run, and full TP right there. I wouldn't necessarily take these trades here. I'm just showing you this as an example. I wouldn't take the trades because the candles are too big. You know, if you look over at the red flags, these still apply no matter what the time frame is. If it's on the 10-minute, if it's on the 5-minute, 1 minute, it doesn't really matter. But the candle is just way too big, so I wouldn't have entered that trade. Again, right here, there's another snipe that looks like it would have been available, but I wouldn't have taken this trade either because this candle here is super huge. One way to identify if these candles are too big is just by measuring them, right? So like this one right here that I used for the example, what you would do is you would just measure like this candle right here. You'd measure the entire candle, right? The entire candle is like 1,270 pips. That's a huge candle. You compare it to all these other candles right here. This is a normal size candle. Like these candles right here are normal size candles. This is like 500 pips max, right? You're comparing a 500 pip candle to a 1,270 pip candle. That's like way too big. So I wouldn't have taken these trades here. I would wait for something that's a little more normal, right? So if I go back over here, so I would have avoided all of these right here, but I probably would have taken like one of these over here. Okay, so you guys can see the difference with these now. So these candles aren't too big because if you measure these, like this candle right here is 560 pips, right? You look at the next candle over here, this is like 500 pips. This right here is like 600 pips or 800 pips or whatever. So this candle here is normal compared to everything else. Again, right here is another entry. You have a wick rejection off the pivot, wick rejection off the structure. We have a bullish momentum here. So you're looking for a buy. You enter a buy right there, long position. All right, same thing, you enter for a quick 500 pips. You let it run, and then full TP right there. So this is one that I would actually enter. You know, I probably got to figure out a way. Maybe I could just stick this on the chart somewhere, like whenever we have a chart open, so that you guys can remember, you know, where these sessions, where like the red flags are. Because I think one thing that a lot of people don't take into consideration is when the candle's too big. The reason why we don't take trades when the candle's too big like that is because you typically get a retracement. So like for example, right here, I'll show you this candle over here, right? Not that there's an entry here, but you can see how this candle is huge, right? Compared to the other candles. This candle right here is 1,070 pips. The candle like right here where the candles are moving normal, this is like 500 pips, right? That's a normal candle. Right here, you can see that this candle is so huge that typically what happens is price retraces up either halfway or the entire candle before making its way back down, right? And you look at the following candle here, the same pattern. It actually lined up exactly like this first line I drew. You can see it kind of pushed up a little bit and then it comes back down. So it's a typical pattern that comes up all the time. And that's why it's one of the red flags. If I ever see a big candle like that, I just wait for it to pull back and maybe I'll enter for a late entry if I wanted to enter a trade at that point. So. Yeah, Kevin said London session leaves crazy wicks on the candles. Yeah, and I agree, Kevin. That's why I don't even like trading during London. A lot of people like trading London, but I feel like it's super risky. Like a lot of people like that riskiness and they like the volatility, which does work in your favor sometimes. But a lot of times you get a lot of choppiness. If you want to trade London, I would probably just trade the UK 100 or the DAX actually. The DAX kind of mirrors US 30, but that's probably the asset that you should probably trade during those sessions. But yeah, no, I agree with that too. Yeah, Craig said I'm off for the night, guys. Speak to you all tomorrow. We'll catch up on the rest of the video on the YouTube. All right, Craig, we'll see you tomorrow. So let me scroll up real quick and see if there's any other questions. Donovan, if there's any other questions regarding the snipe, just let me know so I can go into it more in detail. But I think for the most part, it's pretty self-explanatory and you probably understand it already. I don't know if there's like one entry that you might have taken and maybe have lost and you're wondering why you lost it. If you have an entry, I can take a look at it. But for the most part, I think that's it. Okay, perfect. No problem, Donovan. Glad I could help you with that there. Let me scroll up and see if there's anything else here. Kevin's asking, hey, Sean, what do you use to copy your trades? I use social trader tools. Some people like it, some people don't. I've been using social trader tools for a couple of years now, like maybe 2 years now. And I've had issues here and there where trades wouldn't copy, but it was mostly due to the broker. So I think it's fine. I feel like a lot of people look for something to blame when they lose a trade. Like if they lose a trade and they want to blame it on the copier, 10 times out of 10, it's not the copier's fault. It's probably their fault. So for me, I think social trader tools is fine. I've been using it for a while now and I haven't really had any serious issues with them. So you can use them if you want, but I hear other people use other copiers, but for me, I haven't had any serious issues where I need to change it. So I've been using them for a while now. Let me see, I could even pull up the website for you. And that's the same one that Charles uses too. So this is the one that I use, socialtradertools.com. It's basically a VPS. You just put your accounts on there and then it just copies all your trades to all your accounts. So let me scroll up real quick and see if I missed anything else. All right, so went over Donovan's question, went over Steven's question. Swelly wants me to go over the pivot scalp. So I can go over the pivot scalp here. The pivot scalp works like on like almost, well, majority of the time frames. We'll show you the ones here on the 1 minute. For the pivot scalp, you're basically using pivots 3 and 4. This strategy is probably like the easiest strategy you guys can learn. You just want to confirm you're trading in the direction of overall bias. So with this right here, we're just going to assume that, it was bullish. So if you were to enter this trade right here for a buy, it'd be this green candle. So first requirement, confirm overall bias. We can't confirm it. So we're just going to assume that it was bullish. You want to confirm a valid K2 momentum signal. You want to confirm it's above the pivots and you enter a buy right there. You enter the buy, full TP right there. So there's an example of a pivot scalp. Again, right here, there's another one here. Again, I wouldn't take these trades because it's like right at the end of the session, but just using it as an example. Here's another pivot scalp here. You probably wouldn't have taken this because there's no bias in that direction, but if you were to take it, looks like it actually does hit TP right there. So another pivot scalp there. Another one right here. But again, you wouldn't take any trades after 12. So I'm just going to mark up 12 o'clock right here. Basically, we just skip all of these trades over here. Even though they would hit, I would just skip all of them. Anything after 12. There's another pivot scalp right here, but I don't think we would have taken this because the sentiment was a sell and the fundamentals were bullish. So realistically, you wouldn't have taken any of these trades over here. Even though this hit, you wouldn't have taken it. Even though the last one over here hit, you wouldn't have taken this trade either because you need to confirm the overall bias. So nothing after 12. There's a lot of buys here that would have hit, like these right here. But I wouldn't have taken any of these trades because of what I just mentioned, right? The overall bias wasn't bullish because retail sentiment was still 60% long. So even though these right here would have, I mean, basically all of them would have hit full TP, I wouldn't have taken any of these trades because it doesn't fit the first requirement. Maybe this one right here, but I wouldn't have because Powell is speaking, even though it would have hit TP. So right there, this one over here would have hit full TP. It would have been in the direction of the bias. But the reason why I would have been careful about taking any trades on this period is because Powell is speaking right here at 9:20. So from right here, Powell started speaking. I probably would have avoided any trades, but this one right here still would have hit full TP for sell. There's another one this morning. So this is from this morning on the live session. I didn't take it, but I did see a couple people did take it. This is one that would have been a valid entry though. This would have been valid because we knew the overall bias was a sell. We had a valid sell signal right there. It was below the pivots. If you know the trade there. Well, actually, I don't know what happened to this one. We were on the live during this time. Was it at the sessions? Let me see. Yeah, actually. Okay, so I take that back. I wouldn't have taken the trade here because it was right at the sessions. Now I remember. So we had the B3 right there, but it was like literally at the sessions. So we wouldn't have taken that trade there. You could have taken this one pre-market. I don't think there was anything wrong with this one over here. Bias was a sell. I know sessions around that area. Yeah, the session was like way down here. So this is actually one that would fit all the requirements. Overall bias right here was a sell. Valid K2 momentum signal for a sell. Prices below the pivots. You enter a short position right there. 100 pip TP, 300 pip stop loss. Let it run full TP. So there's one that actually would fit all the requirements. Yeah, thanks, CT. CT said it was sitting right on top of it. Tony said range in sessions. Yeah. So good job paying attention, guys, because I totally forgot about that. But I do remember it was because I remember the last 30 minutes. We even got off the session, you know, a little early because there just wasn't any movement. So solid. Yeah, Patrick said out of all copier social trader tools is the easiest in my opinion. Yeah, and I agree with you too, Patrick. That's why I continue to use them. All right, so let me see if there's any other questions. I think that might be it. Yeah, I think that's about it, guys. Let's see. Kevin said, you make this so easy with your indicators. I don't see how people lose more than they win. I feel like most of the time it's just not following directions, right? I think the strategies and the indicators make it so easy that people think they can take every single trade and not lose, which in a lot of instances that could be the case, but you know, usually it's just like one step that people miss. Like a lot of times it's just the overall bias. Like whenever I see people take a trade, like if they're taking a pivot scalp, typically it's like overall bias. The main things that people don't confirm are overall bias because people get impatient, right? Because I know sometimes you guys will see good entries and you guys want to hop in, but the retail sentiment and fundamentals don't align, which is like super key because you guys want to make sure that you're trading in that direction. Another thing is the red flags here, right? I feel like a lot of people don't pay attention to the red flags. This is like one of the main things I look at. the two main things that I always look at before I even decide to look at the chart would be overall bias. I make sure there's an overall bias. If this isn't here, then I don't take any trades. So if there's no overall bias there, then I completely, if this isn't there, then I don't look for any trades. Once there's an overall bias, like today I took sells because there was an overall bias for a sell. Yesterday, I took 0 trades because there was no overall bias. So if this isn't there, I don't take any trades. Another thing is these red flags. People fail to like follow these. If any of these are met, I typically don't take the trade. One outlier is if the candle is too big. So if the candle is too big, then typically I'll let it retrace. And then as it comes back down, I'll enter for a late entry. This is like one reason why I would still take it even though it's a red flag. So yeah, for the most part, I think that's the main reason why a lot of people mess up. But yeah, I kind of do agree with Kevin. That's why like I only take a few trades a day and I like never lose because I wait for like those perfect entries. I don't necessarily take every entry, even though there's a lot of entries on the chart. Tody said, when we don't keep the rules, we lose. It's very easy actually. And I agree, Tody, with you 100%. I try to make the strategies as easy and as possible. It's just really following them. And, you know, sometimes some people just have to take a couple losses before they can like really drill down into understanding the concepts and following them properly. Tody's asking, Sean, always we must to trade only when the sentiment and fundamentals are in the same direction. So for me personally, yes, that's my main requirement. If these two aren't met, retail sentiment and fundamentals, the technicals are like whatever. I don't really care about technicals too much because if these two are met, then I know price can go in that direction. So the technicals don't really bother me too much. I just ignore that. It's like, it's just there because it is there, but I don't necessarily look at technicals at all. I typically look at retail sentiment and fundamentals. For me personally, yes, if these aren't met, then I skip the trade. I don't even trade for the entire day. And you guys can see the consistency here, right? With my trades. You know, I'm not locking in like Kevin profits, like Kevin over here is locking in like a ton of profits. I'm not locking in these kind of profits, but the thing with me is I have my consistency, right? I maybe will take 1 or 2 trades a day and I barely have any losses. Like if you look at all my trades here, these were all wins from like last week. This one I took like 1 trade this day, but they're all wins. So for me personally, I make sure that it's met, but it's not a hard set in stone requirement. But if you guys do want to have the consistency, then yeah, I would require that you trade the same way I do. Patrick said people forget we trade the 1 minute, so there's going to be many entries, but also more risk. Higher the time frame, less entries, but also less risk. It's all about your personal psychology and risk tolerance. Yeah, and I agree with you 100%, Patrick. If you guys can't handle the 1 minute chart, then I recommend you go to the 10 minute because the 10 minute is super accurate as well. I think whenever I take the V3s on the 10 minute, I like almost never lose. I don't think I've lost the V3 on the 10 minute as long as it's in the direction of overall bias, like ever. I even traded during Asia session and I don't lose. But the thing is, you have to remember that you have to have an overall bias. That's like key. So yeah, if you guys can't handle the 1 minute, then I would just go to the 10 minute. You're going to get less entries, but they're going to be higher quality because the market doesn't move as crazy on the 10 minute as it does on the 1. And you're going to have a wider stop loss. So you're going to be able to withdraw any drawdown or pullbacks. Lisa's asking, hey, Sean, with the DOM, should it be set to 1030 or 130 for TP stop loss using FTMO? For FTMO, you're going to be using 100, 1,000 and 300. 1,000 and 3,000, Lisa. I know it's confusing from broker to broker, but for FTMO specifically, you want to have it set to, if you're going for 100 and 300 pips, then you want to set it to 3,000 and 1,000. You just add a 0 to it because they use micro lot sizing. So you have to add a 0 to it because it's like 300.0, but there's no dots. You just add a 0 to it. Yeah, no problem, Lisa. All right, guys. So let me see if there's anything else here. Yeah, exactly. Totally said contract size is different from broker to broker. That as well. So for FTMO, I use a 10 lot. For MFF and TFF, I would use a 100 lot because they use like nano brokers, like nano lot sizes, um, compared to the FTMO, which uses or I don't know, maybe I'm off. Maybe it's like a mid. I get them mixed up between mini, micro, and nano, but I think FTMO uses either either mid or either micro or nanos. Probably micros. Micro, yeah, thanks, Tony. Yeah, it is micro for FTMO. All right, guys, I think that's it for the questions here. Let's see. Kevin said, I'm going to take it easy for the rest of the month. I'm up over 100K thanks to Sean and his daily analysis. Nice, Kevin. Yeah, keep it up, man. If you can do that every month, I mean, that's really key, Kevin. If you can do that every month, sky's the limit at that point. For me, I just don't like taking that much risk. I just like trading how I trade, and less risk, less work, less stress, and I just get to go on with the rest of my day. So, all right, guys, we've been on this mentoring session for about 2 hours now. If you guys have any other questions, feel free to put them in the chat right now. If not, we're going to wrap this up, and then we will pick back up for our live session tomorrow morning. If there's any other questions that you guys have and they're not answered today, it's fine. We have these mentoring sessions weekly. So hopefully you guys pulled some value out of this, and hopefully you guys learned everything that you guys need to learn to excel into the next week so far. Or into the rest of this week, actually. It's only Tuesday. I keep forgetting it's only Tuesday. We still have, 4 more days to trade, or 3 days, I guess. But yeah, market's closed right now. It's going to open in about 9 minutes. If you guys do plan on trading on Asia Open, I recommend you probably wait for the first hour or two for the market to stabilize, and then probably trade until 10 p.m. my time. That's what I start. Well, not what I started to notice, but what I've been noticing. If I trade during Asia, I stop trading before 10 p.m. my time Pacific, because that's when I start to see the market start moving weird. You start to see a lot of manipulation in the market, and if you're stuck in a position, I would just pull out, because typically when I trade during Asia session, I start to see weird movements around 10 p.m. So if I trade, I'll trade from like 6 to 10, maybe take 1 or 2 trades off the 10-minute, and then wrap it up until the next day. So, all right, guys, I think that's it. If you guys have questions, feel free to email me or message me on Telegram. Otherwise, I will see you guys tomorrow for the next live session. So